Good morning, everyone. Welcome to the Trading Market Technicals Morning Call video for Friday, January the 3rd. I want to say happy holidays to everybody. Welcome back to work. Markets are now in full swing. We do have a big storm in the East Coast. So today is Friday, and we will probably be a little bit of light volume, which will kind of probably skew any type of moves that we have. Basically be a little bit more exaggerated than usual. But anyway, I wanted to put out a real small video. Not the normal one, but I wanted just to get something out. We did get a sell-off yesterday, the first day of the markets, which is very unusual. Usually we get a little bit of follow-through from December 31st, all-time highs. Usually markets come in and they kind of move higher in the first couple of days of the new year, and then you need to kind of reevaluate where the markets are really headed. But having a down day like this, Dow was down 135 points, is something that's interesting. However, one day doesn't make a trend. We're still in a pretty ferocious bull market at the moment, but I want to just point out here that we are at major extensions in the monthly, daily, and monthly, weekly, and daily charts, and even hourly charts. So everything, as we all know, is grossly overbought, and we need to just be aware of what's going on. So if you're looking to continue with this run, I would just kind of see where the markets are headed first before we look to start adding into some new long positions going into the brand new year. Me personally, kind of took me by surprise because what I usually do coming off the week, I'm not really just getting acclimated, getting my list together, my trade ideas for 2014. That's what I usually do while I'm watching the markets for the last couple of days of that week, that holiday week coming out after New Year. So that's what I've been doing. So I haven't been doing much of anything other than the fact of getting prepared for 2014, really for next week come Monday. Monday is my official day back, but I wanted to get out this small video just to let you guys know what we are seeing. Now, there are a lot of pundits talking about, oh, you got to buy the dip, you have to buy the dip, and that might be so, but we want to make sure that when we're buying the dip, we're buying into some good support here. So the markets are extremely overextended, and this is a logical spot for a pullback. And as we all know, I've mentioned many times, the markets are made to fool the masses. So you have to really be heads up. Do not listen to what CNBC, Fox News, and all of the pundits. Look at what the chart is telling you and make your decisions accordingly. Okay, so I just wanted to show you a monthly chart here. This is a 1272 extension, a Fibonacci retracement from high to low from the 2009 market crash of 666. We have now met that extension target. To me, that is a logical place for a pullback. And we can come all the way back to the 8 monthly at 1735, or even the retracement of 1594, and still be in a healthy uptrend. Okay, so I just want you to realize that a 10% correction is not out of the cards. What I think the markets will continue to move higher in 2014, but not without some decent pullbacks this year. I do think that we are headed into some good pullbacks, which is healthy for the markets, and which makes this a tradable market. And I think that that's going to be a good thing. Like in 2013, we had nothing but up days every day. We had 2-day pullbacks, if that, and then the market was bid up. And that's thanks to the Ben Bernanke and his cohorts pushing money into the markets every single day in 2013, and then some. But take a look at the weekly chart. Well, here's a daily chart, excuse me. Take a look at a daily chart, and you'll see we've made 3 extensions. Absolutely insane. That doesn't mean that I'm saying to short the market or that we have some sort of a top in place. What I need now to see is price starting to roll over on a consistent basis, making lower lows and lower highs. Now, as you can see here, this area of 1830 is a pretty big area, but if you drop it down to an hourly chart, and here's where I have a lot of my numbers here, and here, as you can see here, we had a 1618% retracement, and we hit that right to the penny on Christmas Eve, New Year's Eve, excuse me, and now we've actually rolled back over again, and as you can see, having a little difficulty. Now, we're up about 75 cents in the pre-market. We were up over 2 and change. So, to me, I wouldn't get too aggressively long buying the dip at the moment. Again, we are very extended, and a logical pullback even to below 1800 is not out of the cards here, and they can easily see that. Okay, hence, in case the point is crude oil. Crude oil just took 3 weeks worth of gains in one day, and that's why I say never look to chase any commodity play, especially crude or any type of the precious metals, because they will give you an opportunity. You just have to be patient about it. But anyway, here's the E-minis. Now, what I'd like to see is I'd like to see a breach of 1820. Okay, and then let's see where we go from there. But we have to analyze what's happening here. This, to me, could be something bigger brewing, but we really don't know. It's only a day. So let's see what happens today. There is a big storm here on the East Coast, so that means that there's going to be lighter volume than usual. And take that into the fact that we're coming off of a holiday week. Volume is going to be extremely light, which will skew the moves and really exaggerate the moves, one way or the other. So just remember that, okay? Be aware of that for today, okay? But let's see what happens today if we get a bounce. If we get a bounce and make this lower high in here in this area, if we get it back up to that 1832 area, 1835, and we get that just underneath this little area of that little horizontal channel here, if we get into that area and we start to fail again, and then we take this area out of 1820, that's when I think that you might have a local top in place where you can actually start looking to, yes, I know, and I'm going to say it, looking to start shorting the market. But right now, that's not the case, okay? So just be aware of what's happening around you. If you have a bunch of longs, maybe tighten up some stops. Or, I'm always a fan of buying protection here. As you know, puts it very, very cheap, as there is no volatility at all in the marketplace. So just be aware of what's happening. Starting on Monday, we're back to work full time with the videos, and we will have a big full report on Monday. I might even put it out Sunday so you guys can kind of watch it a little bit, and we'll do some forecasting for 2014, as well as start putting out some I'm going to start dialing into some ETFs for some trade ideas. For I get a lot of emails saying that, what are you looking at next? And so, not that I'm going to make major recommendations, but I will tell you what I think is hot as far as the ETFs, and maybe dial down into some individual stocks as well. Have a great day. Enjoy the weekend. Be safe if you're out on the East Coast. Got over about 8-9 inches already early in the morning here. Have a great day, and looking forward to get back to the markets. Take care, everybody.